Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are just after market close on Monday, October 25th. We're going to take a look at SoFi today. Let's start actually on the daily, which I have, because it's such a disaster, on my Webull to look at, just to check in on this flag that we've been talking about. Now, this is still very much intact. The price action today sort of settling in the middle of this wick, as you see. And so I'm looking for any signs here of exhaustion, so that because of this large run up that the buyers are just going to exhaust, selling is going to accelerate, and you can imagine where that goes. And another sort of indication of that is this drop off in volume that we've seen ever since this really solid 7.5% up day with 48.5 million of volume. Compare that now, it's probably still ticking in today, but just shy of 15 million at the moment. It'll probably be over that, but about 19 million on Friday, and that's coming down from the mid 20s. So I think there's sort of a couple of possibilities happening here. One could be that the rally is exhausting, and that could lead to some selling off, or two, it is just sort of going to consolidate and compress the price action inside of this flagging area and then make its next big move. I mean, you see something not so dissimilar back here, right? If you look at this run up here, and then as this started to kind of fade back down, we saw the volume significantly decrease, and it just sort of staying relatively flat, and then you had this big push up. So I could see something like that sort of taking shape again, but like I said, just kind of keeping watch on these different candlestick formations. I'm glad we didn't see another one of these. That looks almost like an inverted hammer. Not exactly, but close. And those like large wicks to the upside can be sort of telltale signs, or additional signs pointing in the direction of buying exhaustion, but we'll see. But that's where I'm looking at it at the moment. This looks more like a potential bull flag coming in than anything else. But these are the sort of indications I'll be watching for. Structure of the candles, where does this volume go? And if the volume continues to dwindle, are we able to continue to stay within this flag here? Those are the key components to me. The other thing is, earnings is going to be coming up here in maybe close to 3 weeks at this point. And so I'll be looking for indications on when the run-up might start. As you know, we had this, what looks now like kind of a modest run-up to earnings last time, but definitely after this big beatdown, after the lockup, this felt like a pretty solid run into earnings. So, if this is going to continue to sort of build on that trend, which that was the first time that we've seen it, so start to establish a trend of running up into earnings, be looking for that sometime in the next couple of weeks to see if that's going to happen or not. Back here on Webull, we can pop out to the daily just to see, absent of that flag pattern, where we are. So the other thing here, sort of the way that we're looking at it here, is this yellow line and this white line happen to kind of make the same thing. So it's not so dissimilar. But like I was saying, I think on Friday's video, this is just a really strong nexus point at the moment, because there's this 2058 supply and demand zone, which we have right here in blue. We have this yellow downtrend resistance line, which on the weekly has provided downtrending resistance since February, early February, and confirmed there. And now the question is, can it poke through? And then beyond that, we have the upper bound of this channel that the price action had gotten into, and that's where I was saying, a couple of weeks ago, that this would be the escalator up. But we were able to punch through, and now it's sort of struggling with that punch through a bit. But those are three critical factors: long-term resistance, shorter-term resistance, and a supply and demand zone. So it's sort of like, with those three things converging right where the price action is at this moment, where does that leave buyers and sellers in the price action as we get through the next few days. So this week will be pretty telling in my mind. The other thing I thought we would do quickly is take a look at some of the indicators that we haven't looked at in a long time. The MACD stretched up quite far here. I mean, by SoFi standards, right? Not that overextended, generally speaking. But question here, it's curling back in, obviously, because we see this action here. But is it going to do something like we saw here or here? You know, this is head faked several times, which is why I've been using the MACD less. I think that the trend lines and supply and demand zones have been more telling because there are so many head fakes, but the head fakes provide really good bounces. I mean, we've talked about that many months ago. RSI still saying quite to the overbought side of things, but you know, kind of interesting that it's staying flat here while we see this flag pattern kind of trying to take shape. So it'll be interesting to see where it breaks. I don't know, I mean, how much room it would have to run to the upside, but there is a saying out there that's buy high and sell higher. So there's definitely a lot of folks that are into these momentum plays these days for sure. Now, we're quite extended from the moving averages. So that's something to probably keep an eye on. You know, the further, I think I was saying this also in Friday's video, the further that we are away from MA support, the further extended we are, and the further from your reward ratio you are. You're in a riskier position if you're taking positions up here. And that may be part of the reason why it seems as though buyers might be kind of slowing down at the moment with a steep drop off in volume. But that doesn't mean that they couldn't come roaring back pretty strongly. Bullish crossover with the 20 crossing over the 180 there, 50 curling up nicely, so that'll be a second bullish crossover if that crosses over the 180. So we'll see what that brings, but I wanted to check in on those since it's been a while. Now, for folks that have enjoyed the intraday chats today, we had this kind of action going. Not a lot of help here, not even from the Ichimoku cloud being in no man's land here. We have like a 1993 level down, I think. 1993 is the level down. And so, I mean, it got within 17 cents of that, but you can't even see it on the chart when it's laid out like this. So this dip is what I'm referring to. You know, like I said, sometimes you're just going to end up in no man's land. You can't plot levels every single day that are exactly on the money from the intraday chart reading from the daily. Now, one other thing though to look at, so here's where you could have pulled that zone from. You see 2022, and we talked about this a few videos ago, pulling in the pre-market and sometimes even the after hours from the day before price action to pick out just the high and the low and say, okay, intraday today, these are the most important pivot points for this stock. So 2022, and what did that hit today? 2010. Okay, so like that's, you know, reasonably close. It's within a zone. And then to the upside here, let me just pull this back out to the daily. To the upside here, yeah, I mean, there wasn't really anything. There was like this zone, like 2066, which didn't play much of a factor because after it got down to this 2010, which like I said, you know, it's easy to get lost in that area because there's not much there. But when it ran up over the VWAP, then look what it did. It just kind of triple tested and confirmed that 2058. Now that starts to make me a little nervous when it keeps testing it, right? But it was able to punch through, and then it got up here. And then what I was tweeting today, why these boxes are here, and then I'm going to delete them, is you know, saying looking for it to make its next breakout above this white box. It wasn't even able to get there, and you know, was sort of warning that if it dropped through this purple zone and started to move away, right? Confirmed resistance there and started to move away, to just be cautious. Luckily, it was able to bounce at the VWAP. And so part of the other thing here to think about is you have this intraday pivot point that's very close to the VWAP, which is then very close to a support zone that it had confirmed earlier in the day. So at this point, you know, so like I'm feeling pretty good intraday because I know that I have this support zone, and if it can't hold that, I have this support zone, and if it can't hold that, I have this support zone. So I just have a very clear sort of path to, I have several off ramps, right? So if I wanted to close a position intraday or swing or something like that, I had plenty of off ramps to not get stuck bag holding in the sort of vast scheme of a larger drop. But kind of a tricky one today, to be honest. I kept kind of putting out the hopeful vision that, if it could establish like here, this looked pretty solid because the previous resistance point was here, and that was as it was able to break through. I was hoping it would break through and, if anything, confirm support here and then make a run up over this 21. And I think had it gone there again, I think there's a good chance that it would have broken through. But the volume really died out at that point, and there just wasn't any sort of significant upward pressure that was coming in. But that's the intraday as I saw it. And then lastly, let's take a look at the short data. We'll give old Ortex a refresh here today. Utilization sitting about where we've seen it, cost to borrow about where we've seen it, days to cover about where we've seen it, and just a slight change. So not really anything going on with the short sellers and applying any pressure. Also, we'll be interested to see if that changes ahead of earnings dates. I can't really recall. I could go back and look and see what happened in the run-ups to the previous earnings call, but to see if they might sort of duplicate whatever happened there. But for now, this is looking like they're kind of staying away, and I'm a-okay with that because this is moving a rolling 1 month, still with the rolling 1 month up over 22%. So again, congrats to everyone who's looked nicely green lately in their SoFi positions, which a couple of months ago, we were not really speaking in those terms. All right, folks, should I leave it on the hopeful, this one here? Yeah. All right, let's leave it here. Okay, well, I hope your trading week got off to a good start today, and I appreciate you watching. I will see you in the next video.